Vikas Khemani is now joining us. He's the founder of Carnelian Capital Advisors. Vikas, good afternoon. How things have turned in a matter of 1.5 months, right? Talking about whether the Nifty will be below 15,000, and now all of a sudden, we're wondering whether it will go to 18,000. But your thoughts on this big move that we have seen and how to approach it now?
I think there was definitely, heightened pessimism in light of what was happening to the commodity prices and, expectation of inflation. And that's how market reacted. And there was a time when lots of worries about the recession was being played out time and again, time and again. And that's where I think global markets became dizzy. And India being part of the global, also kind of took the beating on that. But the good part is that good news is that India on a relative basis remains fairly insulated to the problems which other part of the world is facing. And whenever I think as those issues are subsiding, commodity prices are coming down, war seems to be settling down, though I think it keeps on surfacing. Yesterday there was one more. So I think I personally feel that these kind of things keep happening in the market. When markets are going down, most people will expect it to go further down, and when markets recover, I'm sure most people will expect it to. There's a recency bias which always plays, and I always believe that one has to kind of stay away from this kind of noise. I mean, there's no question, Anuj, that India remains one of the best market, best economy to invest into the world. And there's no country with this kind of profile in terms of growth, in terms of sustainability, in terms of, I mean, a lot of issues around. So I think that part continues to remain. And I personally continue to believe that we have one of the best wealth creation cycle ahead of us. And that's what matters, not really whether, it is going down 5% yesterday or, tomorrow. Uh, that's not something one can really anyway plan.
Right. Vikas, any afternoon, any trends from earnings so far in Q1? How are things looking? And any key takeaways for you?
So far, I think Prashant, the earnings season has been by and large all right. I think most companies have reported very good set of numbers. I think very few sectors or companies have kind of disappointed. Otherwise, I would say broadly, it is more positive than negative. Banking sector has delivered excellent numbers. Retail consumer has delivered excellent numbers. IT has delivered decent numbers. Automobiles have kind of delivered decent. So I think broadly, by and large, numbers are coming in fine. I think commodity sectors, the companies will come out and probably you might see some disappointment there. But otherwise, I think I'd be quite happy, and most companies are guiding reasonably all right. What also recent volatility has done is that it has made companies very cautious and sort of very agile, because this kind of volatility, I think no business can handle. Very hard to handle. So once your supply chain issue, commodity prices issue, I mean, a lot of issues were companies were dealing with. But despite that, most corporates have come out well. Of course, smaller companies have suffered. In unorganized sectors, companies have suffered. That shift has got accelerated in last 1 year. To some extent, listed companies get benefit of that. So by and large, I think earnings have gone well, and I don't see any material change in the earning profile as in the times to come. Fortunately, commodity prices have started softening. Oil prices have started softening. So I guess as the inflation and inflationary expectations settles down, I think business should get back to normalcy. So I think we are still in a transition. We are still, I think, probably will consolidate here and all, but I don't see any problem structurally speaking on any of the sector in India. We have multiple drivers of growth, and the multiple drivers of growth, both from export, domestic consumption, investment cycle perspective, and they are likely to continue.
Vikas, as you were giving us your comments, we had an auto ancillary company, Automotive Axles, that has come out with its set of numbers, and the numbers are looking quite good. And a lot of these OEMs as well as auto ancillaries, they have come out with reasonably good numbers. And as you said, the outlook from here is good. How do you approach this space? Still more steam? Or do you believe now, in fact, most of the returns are already reflected in the stock price? What would be your picks?
So I think, clearly we are seeing auto sectors have been in a very difficult phase for a long period of time. Earlier in 2018, post 2018, I don't think it has seen good time. There was IL&FS crisis, credit crisis was there, and then I think, when it was recovering, pandemic happened. So I think, and then the chip shortage happened. To that extent, it has had a continuous. So there is a lot of pent-up demand. That it's coming out of a low base. So initial reactions are going to be sharp. And now I guess the earning growth will have to play out, and earning growth could be given the base and given the pent-up demand could be higher and could be slightly steeper than rest of the pack. And in view of that, you will see auto and auto ancillary stocks continue to do well over next, at least 2 years.
Okay, fair enough. Vikas, what are any new themes or stocks that you may have added in your portfolio that you may want to share?
We think that banking, so two sectors we've added. I think banking we increased rather. I would say banking, especially credit, has started doing very well. If you look at numbers of the banks in general, credit growth is fairly robust. Asset quality issues are behind. So typically in a bank, there's a good cycle which comes about. Hype of NPAs, provisioning happens, cleaning up happens, growth tapers off, and then growth picks up. So I think we are in a phase where growth is picking up, and over the next couple of years, I think banking looks very robust, and most stocks are still reasonably priced. We haven't seen any crazy amount of valuation out there. So I think that's one. Automobiles, as I spoke, we've added few names, and there also we remain quite positive. Otherwise, I think usual overall, manufacturing continue to remain very, very promising sector. I think we will see one of the best wealth creation over the next 5-7 years in that sector, because companies are going to acquire significant size and scale. In many of those sectors, and smaller companies will become, bigger companies in this, and that cuts across various sub-segments, whether it is chemicals, that is auto component, defense, garments, toy manufacturing, footwear manufacturing. This opportunity, according to me, has just begun, and that continues to remain very, very robust.
Because you're sounding pretty optimistic, from year on the sectors that you're talking about. Are you adventurous enough to go in for these new age themes? Have you already chipped into any of them? Some of them are down, 50%, 60%, even 70% from the peak. Adventurous enough? I see a bit of a smirk on your face. Tell us what's
Not really. I think still we think, many of those companies don't even have the business model, or they won't probably become profitable for a long period of time. I still believe that many companies are still far, richer in valuation. So I think it's a question of, we keep monitoring. There are a few companies we like for sure, but we would love to sort of see the right time to get in. But still, we don't think there are interesting ideas. I feel the old economic companies, so as we call, though I think there's nothing old economy about them. Business is business. So we are not blind to disruption as a theme, but disruption will happen. But the traditional companies, like a bank, a large bank like ICICI Bank, is doing phenomenal things on technology front, which are transforming and game changing. Now, we can call them old economic business, but they are now new tech businesses effectively, right? So I think probably that fad gets created. People start chasing a particular theme, but I think businesses will get transformed or oriented towards more tech. There's no doubt on that. But under the name of tech, I think crazy stupidities should be avoided, and I think I still think that those are there in many of the pockets. So we would be watchful, but right now we haven't found anything interesting.
All right, Vikas, thank you very much for that. Good speaking with you. Appreciate you joining in with that perspective.